It's about that time of day again. My name is Joseph. Wednesday evening, January 17th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish and trading at the high of a trading range, telling me to look for selling opportunities using the 2-try rule with a target back down to the low tomorrow morning. The S&P is bullish, but trading at 3 levels of major resistance. It's not a great place to start buying now, so I'm waiting for a 2-legged pullback down to that battle zone for buying opportunities tomorrow morning on the Emini. Over on the Nasdaq also bullish, a little bit different than the S&P, still very bullish, trading up at the high of a bull channel on the Nasdaq tonight. That tells me to stay patient. I'm looking for buying opportunities down to the lows of that channel tomorrow morning. And of course, speaking of tomorrow morning, gold is bearish. It got clobbered into the close here this evening. Got a strong move lower to finish up the session on the yellow metal. And I'm looking for a spike in range pattern or possible spike in channel pattern, right, for more reliable buyer failures, right? We're looking to sell more tomorrow, but we want to get it up off of that low. And speaking of clobbered, how about that euro? Euro is bearish with a strong move to finish today's session. That tells me to look for selling opportunities and another leg lower tomorrow. Looking for one of 4 scenarios on the euros. You want to make sure you stay tuned for that. I got a great newsletter in store for you guys and gals tonight. We're having a wild week so far. Of course, holiday on Monday, but these markets have made up for lost time on Tuesday and Wednesday. Hope you guys are having a great week out there so far, but you know what I always remind you, we're only as good, right, as our next trade here. Get a great newsletter, great strategy setting up for you guys tomorrow. Before we jump in, though, and put the plan together for Thursday's session, please don't forget, if you're on our YouTube channel right now, make sure you subscribe to the YouTube channel. That way you always get notified whenever I post a new video. And if you really want to stay in tune with everything that is School of Trade, make sure you head over here to Sideways Markets or to the website at schooloftrade.com and join the newsletter. I'll drop a link in the description of that YouTube video, right? Go into the description, find that link. Come over here to the blog at Sideways Markets, and while you're here on the blog, make sure you join that mailing list, right? That way I'll always send you an email every time we publish a new psychology video, a new newsletter video, right? And I got a couple more video series coming for you guys on the YouTube channel coming soon here later on in the month of January as well. Also, too, before I get too far into it, I want to remind you guys, I'm always posting exclusive content on my many different social media channels, Stock Twitch, Twitter, Facebook, right, LinkedIn, whatever your favorite flavor of choice. Follow me throughout the week for important charts, links, and updates throughout the week. Speaking of charts, how easy is this? All the charts from tonight's video, you can have them ready on your computer tomorrow, right where it says click here to download today's charts. You can have those charts ready on your computer for tomorrow. And speaking of tomorrow, what are you waiting for? We had a fantastic free pass session with all of our guests right here this afternoon. I want to thank you guys for coming out and joining us. If you haven't been part of that free pass yet, what are you waiting for, guys? You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. If you're not a member here at School of Trade, not an advanced member, that is, right, grab that free pass in the upper right-hand corner. It's also part of our free trial. And if you have any questions, hit me up on live support, right? I'm always here to help answer your questions 24/7. If you got any questions, you know where, right, to post them. Hit me up on live support on the right-hand side of the website. All right, enough of that. Thank you so much for sticking around with me through the little introduction there. Let's jump right in. Tomorrow is Thursday already, right? This week just flying right by. Thursday, January the 18th. Before we jump into news for tomorrow, though, it is important to remember we do have some news coming out in the overnight session. We're going to hear from the GDP report, right? Industrial production from our good friends in the Far East, right? Chinese news out at 9:30 Eastern time here tonight, so be aware of that if you trade in the overnight London session. And then don't forget, we got housing starts, jobless claims, and why not just throw the Philly Fed on top of there as well? Everything kind of piled on here, right, tomorrow morning at 8:30 Eastern time. That's what happens when the first day of the week is a Monday. Usually Thursday is just a blitz of news. You know, they don't like to put it back to Friday, and for some reason Wednesday is off limits, so it's usually pushed back to Thursday. Tomorrow we have a peppering here at 8:30 a.m. Eastern time, so that is definitely going to be a shot in the arm early in the session tomorrow morning for all your U.S. session traders. You'll see there's nothing else to worry about in the overnight London session. And then don't forget, tomorrow is also inventory day for all you crude oil traders. Lucky us, right? Lucky us. Tomorrow, if you're trading crude, we're not going to deal with the inventory report until 11 o'clock tomorrow. So we pretty much have a full trading session. If you're a crude trader, you know that we normally have to trade around that news on Wednesdays at 10:30, but the Monday holiday pushed us back to 11 o'clock on Thursday, which I wish it was this time of the week every week, but they don't take my opinion these days. The bottom line, though, is tomorrow 11 o'clock Eastern. Be aware of that if you're trading crude oil, right? And don't forget, tomorrow morning, hope to see you there. We'll be in our trade room tomorrow morning, 8 o'clock Eastern time, and I hope to see you guys right there with me. Let's jump right in. Now you guys know the news we have for tomorrow. Let's grab some charts. Let's put the strategy together here for tomorrow. We're going to go crude oil, S&P, Nasdaq, gold, and then why don't we wrap it up right on the euro, right? Wrap it on the euro. Got the euro and gold. Get some really interesting charts to go over tonight, so make sure you stick around for that later on. Starting off tonight with the black gold, with the Texas T, the crude oil futures. Crude is bearish. It doesn't look that bearish, right? But you'll notice we're trading at the high of a trading range, right? So we're rotating back and forth inside of this range that we pretty much finished yesterday afternoon with. And we're just about to see these buyers try a second time, right, to run higher, which means sellers are on edge right now waiting for selling opportunities with a buyer failure in the overnight session and into tomorrow morning. Again, don't forget, tomorrow is the weekly inventory report, right, which means we've got to watch the clock and, again, keep an eye on market personality. Inventory days are always a little bit different animal, right, on crude oil. So we'll be watching that closely as the morning session comes. Pretty much after 10:30 tomorrow, we're going to start watching closely to see what that personality looks like on oil. I think the most important thing right now is we have some double bottoms, right? And of course, maybe you want to call this range a little bit narrower here. I'm going to call it a little bit narrower here now that I look at it a little bit closer here at the end of the day today, right? So we'll call that your range, right? Because you want to make sure you have that, right? Double top, double bottom, right? That gives you your range. We were unsuccessful at breaking out to new lows below that range here today, and now we're rotating back up to the high of that range. Now we talk about this, I probably sound like a broken record right now, but anytime we see a trading range, flat moving average, double tops, double bottoms, or a triangle pattern, right, of that nature, we're always looking to buy the low, right, sell the high, buy the low, sell the high. And the technique that I like to use, which seems to be the most reliable over the long term, is we call the 2-try rule. You'll notice how we went lower once, pulled back, tried twice, right, and then back up in, right? Here we go now, right? We've got 1 try, right, 2 try. I'm always looking for that second try to fail and run back down in, right? So we want to be a seller up here. What I like about this little area here is that little trap combined with what is a support trend line, right, but might be able to use as a resistance trend line. So right now, sellers are looking for a strong red candle here, right, to give us a signal to start selling this thing back down to the low of that trading range around 63.55, and then from there back down to the low here. And then, of course, we still have that same measured move, right? We haven't, if you look closely, we haven't broken above that prior swing at 31, right? So we are still in the ballpark, right, for that measured move if we can get down right off of that high. So trading range is the first big significant clue on this chart. This trading range has a bearish bias to it, right, coming out of it. So bears in control as we go lower into a sideways trading range. We rotate back and forth, 1 try, 2 try, right, and then back down we go. Now, don't forget, right, this could also lead to a 1 try, 2 try, and if we get some strength going higher here, this becomes a bull market, right? So I have no problem being a buyer, but we need to see some proof that they can break out of this trading range. All right, so as we always do here, right, what if price goes up? What if price goes down? What if price goes sideways? Oh, I almost forgot too, right? We are still watching that rollover. This is the 218 contract right now. If I hurry up here before the opening bell at 6 o'clock, you'll notice here the 218 and 318 contract. As I mentioned last night, tomorrow's the 18th, right? So we should be seeing rollover tomorrow or maybe the following day. As of right now, though, we've got more volume on the 218 contract, right? 427,000 compared to 360,000. So we are still trading that 218 contract, but that may change tomorrow. So be aware of that, right? That 318 contract prices are pretty much identical right now. You'll notice prices are pretty much identical, 64.09, 64.02, which is interesting on crude, right? Normally the price in the future will be a little bit higher just because you pay a premium, right, for that luxury of hedging prices into the future. Remember, these are futures markets we're talking about, and they were originally designed for hedging purposes. I'll let you learn more about that in futures markets for dummies books. But the reality though is we are watching, right, that rollover here for tomorrow. So now back to the plan. What if we go up? What if we go down? What if we go sideways here? All right. Well, first of all, price goes higher. I'm really watching for one of two scenarios. Scenario one would be a move up that stalls out and then comes back down in and allows us to sell, right? That will be the goal for the bears. Okay. I always love it when a 2-try rule gives me a higher second try, right? In fact, if that fails, right, and we end up heading back lower, it's going to be a big move down. It should be a pretty drastic move down because you will have roped in all of those buyers, and once the market pulls back into that range, all those buyers are going to start getting out, and they'll become sellers. So that's one scenario, right? Looking for that. What I'll look for is I'll look for that move down, right, and then try to sell that move going back down in, right? So I'm not a big fan of trying to predict this top, right? What I'll do is I'll wait for it to fail and then grab it, right, on the way back down into that range. It'll be your typical 2-try rule, right? 1 try, and it's kind of the more reliable 2-try where that second try goes greater than the first. The second scenario to keep in mind for tomorrow would be if this second try runs, right? If it runs. If it runs, and obviously we have a new channel we're following here right now. So we'll see if they're going to use the top of that channel. I wouldn't be surprised though if we saw this thing really run through the top, and then we'll use a hidden channel off of that low for buying opportunities tomorrow, right? So I do have a channel here ready to go right now, right? And so obviously we'll see, right? We'll see if we can. See if I can get my drawing tool to act here, right? We'll see if this thing wants to punch higher here, right? If it punches higher and really runs but holds inside that channel, right, then we're still looking good here, right? Buying opportunities off of that prior swing. We'll still use that channel, right, as our guide. But again, right, if it just runs, for whatever reason and blows the top of that channel, then I'm going to try to use that high, project it off of this, right, off of this low, right? It'll be a slightly different channel, right? But anytime we have a trend reversal, I always look for, right, a hidden channel. So that's the plan if price goes higher here. If price goes sideways, now of course tomorrow, right, tomorrow is inventory day. So going sideways wouldn't be totally surprising. But if we end up, kind of sitting here sideways, if we're going on 8:30, 9 o'clock tomorrow morning, and we're still sitting here sideways, you're going to be able to get probably just as much buying opportunities as you would selling opportunities, right, above the highs and the lows, right? So if we end up, into the opening bell on the pit session tomorrow, which the pit session doesn't exist anymore, but 9 o'clock is still kind of used as the old session start, right? If we go through 9 o'clock tomorrow, right, and we're still kind of going sideways, at that point now, all bets are off as far as range direction, and we can buy low, sell high. Again, focusing on failures, 1 try, 2 try, back in, 1 try, 2 try, back in, right, and just focus on those failures. What if price goes lower here? Well, like I mentioned, if we can get a nice strong red candle here, right, in the overnight session, that's going to get us rolling, right, back down to that low, right? So one option obviously would be, right, you're in off of that, right, off of that red candle, or get that move lower, right, and then try to use that top, right? Try to use that top of that range as resistance to finish off that move. So a couple options here, right, as we go lower here for tomorrow. If we find ourselves back down to the low of this range, be very careful selling into that low. We'll look for that sell right back up at the high, and we'll continue to use that range rotation here for tomorrow. Don't forget, if we try to break through the low of that range, right, I want to see that moving average get below it. We call that what? We call that the fake out, breakout, pull back at the moving average below, right? Might even get a chance to use this trend line coming down here overhead as well, right? And that will get us down, right, to that measured move target and that low we talked about in last night's newsletter, right, from January 12th, right? So from earlier on in the month. Looking good right now, right? Give it some time here. Watch that volume. It looks like right now as we're opening here, I just happen to be recording this at 6 p.m. Eastern time. We're neck and neck, right? We are neck and neck. Prices are almost identical here right now. So it looks like the 318 contract might have the edge here tomorrow, but we'll know more, right, once we get in, right, tomorrow morning. All right, speaking of tomorrow morning, what's the plan here? What's the plan here on the S&P, right? What's the plan there on the S&P for tomorrow? Here we got the S&P, nice strong bull run. S&P is bullish and trading at the high of a channel, right? The high of a range and up at a measured move target, all of which are telling me to stay patient for buying opportunities after a two-legged pullback tomorrow morning to make sure I'm buying as cheap as possible, right, for the best return on my risk, right? So you can see here, nice strong move higher here. Got a bunch of really important clues right now. I think the most important big clue, though, is where we are, right? And that is we are right back up to that high that we talked about in last night's newsletter, right? We talked about that. If buyers were able to hold a pullback, we pretty much knew they were going to be going back up, right, to retest the high. And I have to say right now, I talked about this a bit last night, I'm very much impressed with the equity markets today. At first glance this morning, you know, we saw the old bloodbath, the cryptos yesterday, right? Things were down 50%, right? Not on their week, but on their forever, right? So big moves down on the crypto markets yesterday. I'm not involved in the crypto markets whatsoever, but it was interesting, though, to see that the Eminis, right, were also dragged down, right, with them yesterday, too. Today, there was continuation, a little bit of stability, right, a little bit of stabilization in the cryptos today. But for the most part, though, the equity market shrugged that off, no problem at all, right? It was a really good example of the key differences, kids, between the crypto markets and true, tried and tested, right, financial markets, these indexes that we've been trading here for hundreds of years, right, here in the United States. It was it was a really nice to see the equity market say, you know what, we're not going to get dragged down with this. Almost like how a couple of years ago when oil dragged down the equities as well, right? Remember that a few years ago, back was it 2014, something like 2015, right? When the equity markets got dragged down by the price of oil. This was great to see them kind of disconnect from that, right, from that correlation, right? So go S&P, go. Oh, so the bottom line is, right, we got a bull market. Again, we're back up to retest that high here, right? Back to retest the 2808, right, high there. So good for them. Second thing is obviously get a bull, right, a bull measured move. Right, a bull measured move, right? Obviously a big target in a bull market. And of course, anytime we have a trending day, I'm always looking for channel rotation and those measured moves, and we have channel rotation as well, right? So great looking channel and great looking channel rotation. So those are the three kind of main components there. One more would be this reversal line, right? You'll notice that most reversal lines are used as some sort of support eventually here, right? So, you know, we'll expect that to be involved here at some point, if not tomorrow, right, later on in the week here. So what's the plan here? What's the plan? I want to be a buyer. It's definitely a bull market, not a bear market. Where do I want to buy? Well, I really don't want to buy up here at the highs. I really don't want to buy into the measured move, and I really don't want to buy at the high of that channel. So I want to be a buyer, but I got to stay a little more patient here. I'd like to be a buyer down at the low of this channel, right? And I'd like to be a buyer, a little trap low, incorporate that reversal line. That's where I'd like to be buying from, right? That's where I'd like to be buying from. Now, a couple different ways we can do this. What if price goes up? What if price goes down? What if price goes sideways, right? Let's zoom in a little bit closer here. What if price goes lower here? I need to adjust this trend line because while I was not looking, it's moved on me. So it looks like that right there. It looks like that'll be your new falling resistance trend line. And so one option would be as price goes lower, right, this trend line acts as support, right? I call that a two-legged pullback, just in case you're right trying to put the term to the right to the pattern there, right? So two-legged pullback, right? Term for the pattern there, and then let's see here. What else here? What else? We may just get nothing more than failure here, right? Breakdown, failure at the moving average, strength, pull back, and then back up, right? So you're thinking, okay, two-legged pullback off the trend line, seller failure at the moving average, right? Seller failure at the moving average, kind of like this, right? So the market goes down, right? Comes back to the moving average. Bears try, they fail. What's happening right there? Sellers are trying, they're failing, and then sellers, when they fail, they get stopped out, they become buyers, right? And that throws gasoline on the fire, right? Roaring higher here. So that's a similar situation happened earlier today. Look for that tomorrow, right? Kind of the same thing there, right? You kind of see that little pattern right there, right? Pull back, failure, strength, pull back, and go, right? There's a good example there, right, on the S&P, or potentially setting up there for tomorrow, right? That'd be if price pulls back on us. Good example there. What if price goes higher here and we can't make it through the high, right? What if we start going sideways, right? What if we start going sideways here? If we start going sideways, obviously wait for that double top, right? Double bottom, right? Once we see double tops and double bottoms, right, on that chart, then of course we know we have a trading range. Anytime we have a trading range, I'm always going to do what? Buy low, sell high, focus on failures, and use the two-try rule, right? So one try, two try, look for that second try to go lower, right? And then we'll start looking for that move going back up into that range. Hopefully we get a chance to use that, right, this trend line. Hopefully get a chance to use this, right, battle zone. Hopefully it all comes together, right, nicely there for us tomorrow. What if price keeps going higher here? A couple scenarios to keep in mind here. What if price keeps going higher here? It wouldn't surprise me the way these markets have been lately. What if price keeps going higher? Two scenarios you want to be thinking about. One scenario would be this becomes a spike in channel, and it kind of grinds up, right, the high of this channel. That happens quite a bit, believe it or not, especially when we finish the day with such strength like that. Right, now, what do we always talk about a spike in channel here? Spike in channel, look left, right, find some swings. This wasn't drawn very well, but you get the point, right? Find some swings, get that trap low, right, and I want to be a buyer, right, off that trap. So if we keep grinding higher here, the key is going to be, though, right, the key is that we continue to hold the top of this channel. Right? If that's the case, we'll still use the top of that channel, but our goal, of course, at that point will be to get down below a couple of these prior swings and, again, buy at support rather than buying at resistance. We talk about this quite a bit on this, right, on this newsletter. Don't buy into resistance. Not a very good habit to get into. I know sometimes it works, right, but it won't work, right, in the long term. So the other scenario would be, what if we go through the high here, right? What if we just, what if that happens sometimes, right? Sometimes we just blow right through the high. I have a bull target up here from 28.15 up there to 28.21, we'll say, give or take a few. Doesn't really matter the exact specifics there, but let's just say, for example, right, that we run up, right, into that bull target. Then what's the plan then? Well, then what I'll usually do is I'll grab this high, right? I'll grab that, right, and I'll kind of adjust this now as a little bit more aggressive channel, right? And we'll look for that, again, still not going to buy high. I'm not saying I'm going to buy high if that happens, but I am going to say I'll make some small adjustments and keep focus, right, on buying low. And obviously at that point, right, maybe this one ends up being a two-legged pullback, right, trap low, failure, strength, pullback, just like that scenario, right, that we saw earlier, right, on the S&P, right? So think about that. Again, that's if we disconnect from this channel, I'll then use this almost like a spiking channel and go looking for that buy, right, off the dip. The hardest part about this market, if it keeps going higher, is just simply staying patient and waiting for the good stuff to come back to you. Great plan there on the S&P for the bulls. How do we turn bearish? First of all, I'd want to see us get through that battle zone on strength, hold the pullback, and go. If we can get those bears to hold the pullback and start running on strength, usually what will happen is we'll get that move going lower, right? I'm not going to chase after it, mark up those lows, hidden channel, and look for the sell right in this area, right there, right there. Combine that moving average, right, with the top of that. Again, it'll be kind of a hidden channel there, right? When a market drops, right, when it drops and holds, okay, you're going to want to focus on that move down, right? Grab that low and wait for it, right? Because it'll come right back up, right? And that'll be the one you want to use, right? As opposed to trying to draw a channel down off these highs, because that's just not going to work. It's going to run right through the low of that channel, right? So if you're an experienced technician, you probably already know that, right? If it collapses, you're not going to draw a channel off the high. You're going to have to draw that channel off of the low. All right, let's keep rolling. So now you know the plan there on the S&P, right? We know what we're looking for if those bears can take it. How about some Nasdaq? Now you'll notice the Nasdaq is also quite bullish. It also has a measured move. We're also trading the top of it of a channel. But look at the big difference in the Nasdaq, right? What do you see the Nasdaq difference here? Yeah, there's a big difference here. The Nasdaq does not retest, right, that high from yesterday's session. So we still have a big juicy bullseye, right, sitting right there at that 68.43 area, right? We still have that nice bullseye hanging out, right, that we're going to use for our bull target. A lot of this is pretty much the same thing, right? You'll notice here, right, those bears got below the moving average. Bears had to sell it. They failed. Failure into pullback, right, into strength, going back up, right, to retest the high, and then flying through, right, up to that measured move. Now, we're going to see a couple more of these on the euro and gold, but this is a very strong move higher. Remember, anytime we see, right, a real strong move in one direction, we know the odds are really good that we're going to get a two-legged pullback and a retest of that high. So we're definitely looking back, and again, similar situation that we just saw on the S&P. Obviously quite different, right? Because we still have some room to go here, right, on that Nasdaq. So I got my bull channel, I got my reversal line there at 95.50. What's the plan, Stan? Let's look here. We've got the again potential two-legged pullback. Moving average comes over. Bears try to sell, bears fail, break out, pull back, and go, right? So those would be some scenarios. Two-legged pullback. Seller failure, buyer pullback, right? And of course, a retest of that high. That's a price, right? Pulls back and goes lower. What if we end up going sideways? Glad you asked, right? Jumping up, pull back, right? We start seeing this double top, double bottom here, right? We know we have a bull market. That tells me to be a buyer. Buy where? Buy low. Don't buy high. It's so easy to get wrapped up in buying high, right? One try, two try. Remember, the best two try rules will actually go to a new lower low. The reason why those are the best is because they get buyers thinking this is reversed, right? They get buyers thinking, oh, we've reversed, right? And then once they realize they're wrong, right, they get run over and become buyers, because when those sellers get stopped out, right, only thing they can do is hit the buy button to get out of their positions, and that just throws fuel in the fire, because buyers are buying and now sellers are buying, right, below the low of that range, right? At least once a day, I have a conversation with a new trader who's not a client of mine, who tries to tell me that buying to new highs, right, is the best strategy. But we saw a great example on that on gold today. If you traded gold today, you try to buy the breakouts on gold, you get all chopped up. It's very typical, right, trading breakouts. So I don't recommend trading the breakouts. What I would say is another option would be a breakout pullback, right, which requires to get the moving average up above that channel high, right, and then that would allow us then to be buying with a breakout pullback. But do you see what I'm worried about here? Yeah, we're right up around that bull target up top there, right? So not a real, I talked about this last night. When you understand the market's context, you can understand why I'm not too excited about that trade. Yes, it could keep going higher, but don't be naive, right? The probabilities aren't that high, because not many people are going to get excited about this, right? A lot more people are going to be excited about an opportunity here, right, to buy a nice deep dip, right? Because now there's all this profit potential to go back to the high, right? People will get excited about that trade. Nobody's going to get excited, at least not that many people, will be excited about buying up here, right? Get that big 6-tick target, right, on the Nasdaq at $5 per tick, right? It's just not a moneymaker, right? So remember, you want to put yourself in the shoes of the other people in the market. And if you haven't been around long enough, if you don't have enough experience, kind of like, being a teenager and driving an automobile, if you can't put yourself in the driver's seat of the car that just slammed on their brakes right ahead of you, if you don't have that much experience yet, then it's probably a good idea to work with someone like me or someone, right, who can be there with you to say, no, let me bring you up to speed on the experience that you don't have yet. Experience is priceless. It'll lower your risk percentages. It'll lower your stress levels. It'll give you confidence. And you know what I always talk about, right, in those psychology videos, right? It's all about confidence and a positive mindset. If you can work with someone, right, either in person or right via the interwebs these days, it makes it so easy, it really makes it easier on our psychology, right? It allows us to preserve that positive mindset, which is oxygen for a new trader. All right, I digress. Let's get back to the plan, right? So that's if the plan goes sideways here. We know if price goes lower. We know if price goes sideways. What if price goes higher here? Well, again, as I mentioned earlier, right, this strong move higher, if it keeps going higher here, right, and kind of turns into a, let's just say, spike and channel pattern, right, keep watching those prior swings. That's a horrible line there, Joe, right? Keep watching those prior swings, and we'll see if we can get this little trap low down here, right, and be a buyer. So, yeah, it takes some patience on that, but we saw a great example of that today, right, on the S&P, right? It took some patience on the S&P, find those traps above those highs here this morning. What else do we have here? Price goes higher here. If it runs through the top of this channel, right, don't forget we're going to try to find a more aggressive channel there, right? Look for that buy coming back down. That's an easy way to do it, right? So if we do break through it, right, we'll use this kind of hidden channel. It'll almost be like a spike in channel almost, right, as it goes higher and try to buy off of that low. Maybe we get a chance to use the measured move as support. We'll see, right? We'll see. The bottom line, though, is the odds are pretty high. We're going to pull back right now in a retest of those highs in the short term on these E-minis. Now, we go from a strong bull move on the E-minis over to a strong bear move here now on the yellow metal and on the euro as well. Gold, the yellow metal, right, is bearish with a strong move lower, telling us that sellers will most likely try for a second leg lower, right, tomorrow. The only question is where and when. The strength of this move is the key. It tells me it's probably not going to rotate all the way back to the channel high. And it's probably going to give us, either a spike in range or a spike in channel or a spike in wedge pattern. This is where we have to kind of wait a little bit and see what this market wants to give us. Now, here's a lesson that I learned a long, long time ago. When we have a channel, right, I like to use channel rotation, right? So sell off the high of that channel down to the low of that channel. But the lesson I learned many, many years ago was when the market races down to the low like this, right? See this? This is a statement move. This is a very strong move. When we see a strong move like this that takes literally a few minutes to go, it's straight down, there's no pullbacks, no test of the moving average, a complete collapse. When I see a move like this, I am foolish. I'm wasting my time waiting for a move all the way back up to the high of that channel so I can sell it back down again. When I see a real strong, forceful move like we're seeing right now, usually what I'll do is mark up that midline, right? And think of that midline now almost like a potential spike in channel here, right? As we go lower, kind of use the bottom half of that, right, of that channel. So I'm not expecting us to go all the way back up. I mean, I'm not going to freak out if we do, but just it doesn't usually happen, right? We see this much strength going lower, that creates a spike. And usually a spike will turn into one of four scenarios. A spike in channel, where we go up and then we start making lower lows. That's the giveaway for a spike in channel, right? Or, right, a spike and range, or a spike and wedge, kind of keep it similar here, right? Those are very similar, obviously, because they have lower lows. Or a spike and range. This is where we don't make a lower low. This is a really important clue, right? We don't make, see how we don't make a lower low there, right? See the difference there, right? These two examples make lower lows. This one doesn't. That's the easy way to know, right? The difference there, right? That's a spike in range. And then we have the last one. This is by far the rarest. It's also the most difficult to trade, right? And that is where we don't get a lower low, we don't get a double bottom, and we actually start making some higher lows and higher highs. This becomes what is affectionately known as a flag pattern, right? Not affectionately known, by the way. I'm being highly sarcastic. It's a rather challenging scenario to trade. Now, all three of these. See, I'm not a math professor, am I? All four of these, right? I dropped out of math class in college. I was not good at math. But the reality was, see, if they would have told me that math would have been used later on, right, for a day trading career where I could make a lot of money with it, right? If my math professor would have hidden, Benjamins in between all the pages of the math textbook, I would have been flying through that textbook. I've been acing all the exams. Bottom line is, right, not a math teacher, I'm a trading teacher. Bottom line, though, is I know that for all of these scenarios, I want to be a seller, right? Sell up at resistance, right? Sell up at resistance, okay? On a range, right? On a range, you guys know this, right? 2-try rule, 1 try, 2 try, back down in, right? And what about a trap or a flag pattern? Flag patterns are tough. There are actually 2 spots for a flag. 1 is going to be up above, 2 is down below, right? That's why they're so difficult, because you've either got to sell up above, right? So again, spike and channel, trap high, spike and wedge, trap high, 2-try rule for a spike and range, right? Or of course that spike down flag, it's either a, right, trap above that high, and then of course you get that breakout pullback, right, down to that low, right? Using the bottom of that channel as resistance. So those are the 4 scenarios we're watching here for tomorrow. It looks like we're going sideways right now, but let's give it some time here. Strong move down, right? Possibly a spike in channel, right? If it goes lower, up and back down, right? Possibly a spike and wedge, right? Up and back down, spike and range. Looks like it right now, but we'll see, right? 1 try, 2 try. Don't forget, we love to get the 2-try rule higher than the first, right? And of course, back down from there we go. And then what else? Doesn't look like a flag pattern right now, but just in case, right? Just in case. Now, a flag pattern, remember, a flag pattern doesn't, right? A flag pattern doesn't turn bullish, right? Because it's not jumping higher. Right? We're not getting a move like this one, right? It just kind of lazily goes, and we'll go up, sell there, trap, sell there, right? Those will be the 2 spots, right, to be a seller as this price kind of goes sideways there. All right, guys? Now, at the same time, really your big thing right now is that moving average, right? The ideal scenario is, can I get above the moving average? Can I get up above that moving average? Maybe use that midline here, right, as resistance. Can I get above that moving average? That's always ideal, right? Get up above the moving average, right? Kind of like we saw back here, right? Strong move down, get above it and sell it back down. That way you can catch some buyers on the wrong side, trap in those buyers. So when they become, right, sellers as well, they're all selling off there, right, with those bears. So that would be the idea, right, if price goes higher. Obviously, hey, maybe it goes all the way back to the highs here again. Probably not, right? But 2-legged pullback up to that high, 2-legged pullback into a failure, strength, pullback, and back down, right? 2-legged pullback, failure, strength, and back down. Price keeps going lower. Watch for a spike in channel. Up and back down we go from there. That's the price goes up, price goes down, price goes sideways. How do we reverse? Pretty, I don't want to say easy, but from what we've seen over the past few hours here on gold, it should be relatively easy, right? Strong move up, and then the key is they've got to hold the pullback, right? Got to hold the pullback and run. So there's a chance that we may find ourselves bullish by the time we go back to the top of that channel, right? There's also a chance here this market may shoot right back up, try to hold, right? Struggle here at these highs, and then fail, and back down we go. So we're going to watch how that condition looks once we get there. But make no mistake about it, though, very strong move going lower. The odds are very high that we wait, get that sell opportunity, and then right back down we go, right, to finish off that move down to that, right, January 12th low. We're going to see what we get there for tomorrow. Now, how about some euro here? How about some euro wrapping up here right now on another market that got a real strong, real wild run here for today? Euro is bearish and rotating back to the low of a channel, but more importantly, back down to the low of this large range we seem to be trading in. Right, if I look left here, you'll notice we had that strong move up, right, to finish off before the holiday weekend. And then you'll notice here we're pretty much inside of a range right now. We overshot the high, we're overshooting that low. And so in all reality, this could be a one try of a two try, and this thing could launch right back up into that range. Now, of course, the big variable, right, the most important thing on this chart right now, though, is this strong push lower, which tells us the odds are well in our favor for a pullback and a retest of that low. So I'd like to see where we go in the next few hours, right, as we open up in Asia, right, just after 6 p.m. Eastern time when I'm recording this. Do we go sideways into a range? Do we keep pushing lower within a channel? Do we run back higher in the same manner that we drop lower? You know, the answer to that question will tell me where the best trading opportunities are going to be in the short term. But no matter what we get, though, this move is too strong to be ignored, right, and I will be looking for another leg lower. I'm going to repeat myself here a little bit on this euro, right? Strong move down. Do we keep going lower with a spike and channel up and then back down, right? Maybe off that low of that range, right? Up and back down. Do we start going sideways here into a range? In that case, one try, two try, right? And then back down from there. Or do we get a flag pattern, right? And remember, a flag is not a reversal. Right, strong move down, chops around, up, down, right, and sell, right. Again, you know, pick your whatever market, it doesn't matter. All I care about here is I just want to figure out what the structure is we have right now. We're rotating through this channel, but this is not a very good looking channel. You'll notice, right, we didn't rotate very well here. So the measured move combined with that channel is definitely support. I think the big clue right now, though, is again that trading range been bouncing around in, right, and this strong move down. Okay, so again, how do we turn bullish? Strength, pullback, strength, right, not a flag, right? Flags just chop higher. You can tell it isn't a flag because there's no pop, right? Now, sometimes flags become reversals, right? If it flags higher, and then all of a sudden it pops, right? That's a reversal. Right, but remember, you want to see something pretty much as strong as it went lower. You want to see something just as strong, right, to shake this thing out of that bear trend, right, and go higher. So right now, the odds are pretty good. We're going to go up and then sell back down. Watch for that strength, right, going higher, right, for a trend reversal, strength, pullback, strength. Then again, from there, just be careful. Get that falling resistance there. So if we do end up being a bull market going back to the high of that channel, make sure you remember we'll use that, right? We'll use that new hidden channel off of it. Buy from there, right? Don't buy into that resistance, buy away from it, right? Buy. That's if the buyers take control, obviously, right? If the buyers take control. If we end up shooting higher here, moving average comes over and we haven't held the pullback, this then becomes an easy, right, sell right back down again, right? So it all depends on the condition of the market, as we said last night, right, the market's context. All right, guys, hope this video was a great investment in your time. And of course, right, you know what's also a great investment in your time is that free trial here at schooloftrade.com. If you're on the YouTube channel right now, I'll put all the links in the description of the YouTube video. Follow that link, head over here to schooloftrade.com, join our free trial. I'll shoot you an invite to attend on our free pass as well. You can learn all about the basic principles we use here at School of Trade, the technical analysis tools, the patterns that I look for every day in our trade room. And while you're here, don't forget to indulge a little bit on our beginner, intermediate, and advanced classes. We got a great spot for you, whether you're a brand new trader or you're advanced, right, and you're looking for another tool in your toolbox, whatever the case may be. I'm always here to help you guys out. Hit me up on live support on the right-hand side of the website, or pick up the phone and call the office. That toll-free number is right there in front of you, and I will be there to answer the call when you do. As always, guys, hope you're having a great week here so far. What a great year it's been, 2018. It's been one of the best starts of the year we've ever had in our trade room, and I hope to see you there, same time, same place tomorrow. My name is Joseph. Be well out there, will ya? Be nice to each other, and be here next time. Adios, amigos.